Your bank said no. Your tenant said yes. And in 2026, that is the answer that actually matters. Did you know there is a mortgage that ignores your W-2 entirely? Did you know rent-a-loan can qualify you for the loan? No tax returns, no pay stubs, no personal income check, just rent in versus mortgage out. That is the entire formula. In the next 9 minutes, I will give you the exact name of the loan, the May 2026 rates, the credit score, floor, and how to know if your property qualifies before you ever call a lender. First, why banks keep saying no. If you are self-employed, if you run an LLC or an S corporation, if you write off enough expenses to lower your taxable income. Traditional lenders punish you for it. They look at your tax returns. They calculate your debt to income off the net number after every deduction. And that number, no matter how much cash your business actually pulls, is what they use to decide. So a profitable investor can walk in and get told no, even when the property they want to buy will pay for itself 10 times over. The bank does not see the property. It only sees you. Here is the loan that solves it. It is called a DSCR loan, stands for Debt Service Coverage Ratio, and the lender ignores your personal income entirely. They ask one question: does the rent cover the mortgage payment? Yes, you qualify. No, you do not. That simple. The math is rent divided by PITIA, that is principal, interest, taxes, insurance, and homeowners association fees. If the rent is $1,500 and the PITIA is $1,200, your ratio is 1.25. 1.0 or above usually qualifies. 1.25 or higher gets you the best rate. No tax returns, no W-2s, no pay stubs. Most lenders will not even ask for them. Now the real numbers as of May 2026. Fixed DSCR. Rates run from 6.125% to 7.5% for well-qualified investors. Adjustable rates start as low as 5.125%. Compare that to Freddie Mac's 30-year fixed for owner-occupied, which averaged 6.36% on May 14th of 2026. So you might pay a small premium, sometimes nothing extra. Sometimes up to a point or two more, depending on your credit, down payment, and ratio. Here is what you need to bring: a down payment of 20 to 25%, a credit score of at least 620, though 680 gets you better pricing, and 740 gets you the lowest rates. 3 to 6 months of mortgage payments in reserves, a property that cash flows. And here is what you do not need: tax returns, W-2s, pay stubs, employment verification, none of it. Who is this for? Self-employed owners whose tax returns understate their cash flow. Investors who already have multiple properties and have hit the 10-property cap that conventional lenders impose. Anyone with seasonal income, commission income, or one-off business income that breaks the DTI math. It is also for people buying their very first rental. You do not have to already be an investor. You just need a property that pays for itself. Quick favor: if this is the first time someone has actually laid this out clearly, hit that like button and drop a comment below. I read every single comment and reply personally. Share this with family and friends who need to see this. And don't forget to subscribe. We put out several new videos every week. Drop a comment. Have you ever been denied? Yes or no? I want to see how common this is. Now the catch, because there always is one. 3 trade-offs to plan for. 1. Higher rates, not by much, but it adds up. The gap I mentioned, sometimes 0, sometimes up to 1.5 points over conventional, sounds small. On a $400,000 loan, a half point higher costs you about $36 more a month, about $13,000 over 30 years. Plan for it. 2. Most come with a prepayment penalty, 3 to 5 years, sometimes 1% of the balance for each year remaining, sometimes a flat fee. If you plan to flip the property, refinance within 2 years, or sell quickly, that penalty can wipe out your profit. Some lenders let you buy down the penalty period to 0 for a higher upfront rate. Decide which trade-off matters more for your plan. 3. Tighter rules on short-term rentals. If you are buying an Airbnb, most lenders will not use your projected nightly income. They use the appraiser's long-term rent estimate, which is almost always lower. the DSCR. Math may not work even on a property you know will gross plenty. Specialty lenders allow short-term income, but they charge more. Know which kind of lender you are talking to. Now, how to actually qualify on the first try. Step 1. Run the math yourself. Take the expected monthly rent. Subtract the PITIA, positive number you might qualify. Run the ratio. Know it before they ask. Step 2. Push your credit above 680. 620 is the floor. The gap between 620 and 680 is real. The gap between 680 and 740 is bigger. If you have time, push the score up. It pays for itself many times over in interest savings. Step 3. Have the down payment and reserves before you make the offer. 20 to 25% on a $300,000 property is $60,000 to $75,000. Plus closing cost of 3 to 5%. Plus 3 to 6 months of PITIA in cash. The deal will not close without it. If you do not have it in a real account when you make the offer, you are wasting everyone's time. Step 4. Pick a lender that actually does these loans. Most regional banks and credit unions do not. You need a non-QM lender. Get pricing from at least 3. The spread can be massive. The same deal can quote at 6.125 from one lender and 7.75 from another. Bringing it all together. Conventional banks deny self-employed borrowers and investors all the time, not because the deal is bad, but because the tax return formula does not capture cash flow. The DSCR loan solves that by qualifying you on rent instead of personal income. May 2026 rates run 6.125 to 7.5% fixed. Down payment 20 to 25%. Credit floor 626.80 plus much better. Here is the bottom line. If your tax return makes your income look small, or you hit the conventional cap on financed properties, this is the legitimate, widely used path. Just go in with eyes open about the rate premium and the prepayment penalty. Here's what to do this week. Pick a target property, run the math, pull your credit, confirm you have 25% down plus reserves. Then call 3 non-QM lenders for quotes. One afternoon could put you in your next property by the end of summer. If this video helped you, please give it a like and leave me a comment with your thoughts or questions. I read every comment and reply personally. Send this to family or friends who need to see it. And make sure you subscribe because we put out several new videos a week, all free. And the next video you should watch is the one tax loophole rental investors are using in 2026 to pay almost nothing on rental income. Completely legal. Make sure to subscribe so you don't miss it. It'll be uploaded within the next 2 days. See you there.